Hey guys, welcome back. Hope you had a good Tuesday in the market, April 13th. Looking at GME today, sitting right at that 140. I tweeted out earlier today. It looks like, shout out to the Wall Street Bets article talking about the max pain of this week on the options contracts is 140. And yeah, you could see it yesterday, and now we're seeing it today too. Basically yesterday it was kind of a little higher, holding a little higher than 140, and then kind of sold off into market close, and then had these big candles. So I was still kind of bearish on it, but then hearing about that, the max pain being at 140, I didn't look into the contracts, but it makes sense, and you can kind of even see it here. See, today's open was right here, opened up, dropped down to 132. Pulled back, didn't like it, came up to 144. It's just, and then it's just kind of magnets. If you imagine it being like a one of those toys, I can't even think of what they are, but they like suck to one thing. Looks like it's just sucking as close as it can to 140. Anytime it gets above it or below it, just wants to pull back into that range. So I don't know if it'll hold this one. I mean, I'm assuming there'll be volatility. It's only Tuesday, but I'm wondering if it's going to hold this through the week until Friday. Hedge funds are playing it both ways, and go over the max pain, because I was like, I understand it's option contracts, but I'm gonna read it real quick. Max pain, or the max pain price, is the strike price when the most contracts, puts, and calls, and the price at which the stock would cause financial losses on the number of option holders at expiration. The term max pain stems from the maximum pain theory, which states that most traders who buy and hold option contracts till expiration will lose money. Max pain, or the max pain price, is a strike price with the most open contract puts and calls, and the price at which the stock would cause financial losses for the largest number of option holders at expiration. The maximum pain theory states that an option's price will gravitate towards a max pain price, in some cases equal to the strike price for an option that causes the maximum number of options to expire worthless. The max pain calculation involves a summation of the dollar value of outstanding put and call options for each in the money strike price. So the reason why it's maybe being pushed to this point is because the shorters, the hedge funds, are using the option contracts to manipulate the price. And so potentially this is costing them, these are kind of theories, I'm not certain, but potentially it's costing them the most if we're hitting this max pain price point. And I think we hit it last week too. At one point they were saying, like, come Friday they were trying to hit max pain. I haven't looked too deep into it, but it kind of makes sense, and seems like that could be, there's got to be a reason for why they're holding it at a certain price here or there, wherever it is. But calculating the max pain is a simple but time-consuming calculation. Essentially, it is the sum of the outstanding put and call dollar value of each in the money strike price. For each in the money strike price for both puts and calls, find the difference between stock price and strike price. Multiply the result by open interest of that strike, add together the dollar value of the put and call at that strike, repeat for each strike price. Find the highest value strike price. This price is equivalent to max pain. There you go. That's how you get the formula. I'm not going through it. Someone on Wall Street Bets said it's 140, and I just trust everything I read on the internet. So just kidding, but it's probably true. And I don't, with how GME is, I feel like it'll be hard to see a whole week of it just staying at 140, but maybe it will. Given there'll be some volatility, but it might snap back to this 140. I mean, look at yesterday; it was real flat, huge dip, and then huge run up, and then even today had a big drop and then up, but it's still sticking with that 140. So if you're doing options, you could do a, what is it, strangle, straddle, one of those where basically if it stays in a certain range, you make money. You sell premium on the upside and the downside, and just kind of predicting that it's going to stay between a certain range. I'm not going to be doing that strategy on it, but it is kind of interesting to look at. On the hourly chart here on GameStop, MACD's kind of crossed over today, actually. Way below the equilibrium, but it's kind of crossed over, which is a good sign. On the RSI, it's kind of creeped up here. Looks like it will be settling in this range and consolidating. And as it consolidates, this MACD will come up and kind of flatten out in this middle range. And it doesn't need to necessarily go up for that to happen. Just it staying flat here will bring the MACD up. Excuse me. On the daily, it still needs to come down some. I kind of wanted it to hit kind of this equilibrium in the middle also, just for more consolidation. And so we might see it more bearish and then kind of come back up to this 140 by the end of the week. My initial thought on the week today, or on the week on GME yesterday and last week, was that we were going to be bearish the first couple days, and then by the end of the week might be rallying. Gamma squeeze, short squeeze, whatever. That might all start. I was thinking by the end of the week, based on different news catalysts, DTCC, recalling shares, whatever, pick one out of a hat. But I'm not sure. I really don't know. On the chart, it doesn't. I can't say that far ahead. On the daily, it's still bearish. Does have a nice strong support here. It looks like about 120. We haven't hit it yet though, and it's just today's volume is so low. Crazy, 6 million, and it's just getting flat. So it looks like it might just keep consolidating this 140 range with some volatility, but maybe coming back and kind of equalizing. So I'm getting out of options on it for this week until I see good price action. We had the put credit spread and the call credit spread. I actually closed out of the call credit spread this morning when it dropped. Made a little bit on it. I don't know how much. But when it was down here, I closed out of the call credit spread because I was thinking if it is going to be this max pain, it's going to be coming back up. And so yeah, I closed out of it, which was nice. I was able to make a little bit. It expired Friday. So the put credit spread, I still have this one. I'm going to try and get out. Hopefully if we have a big bump either in the next 30 minutes or open tomorrow. Basically this GameStop has to close above 145 for me to get max profit on that, which would be nice, but I don't know. I feel like we'll probably have a pretty big bump before Friday. I mean, it might be a quick one like this, just intraday, and then I'll try and get out of it. But yeah, we'll see. But yeah, that's kind of where GameStop is at this point. I mean, there's a lot of different DD, a lot of different stuff coming out. I think by the end of the week and definitely by next week, we should expect something. I'm gonna wait for price action on the options for the most part. I might try and sell premium like I've been doing the put credit spreads or call credit spreads, but yeah. And then shares, I've still got my shares. But yeah, that's it for GME. What else did we do today? Roblox went crazy. If you watched yesterday, I bought the calls, about one call on Roblox, and we have the shares in our free share strategy account. We bought a call yesterday somewhere here. It was up like 30% during the day, if you remember, and then by the end of the day it was down 30%. But I said it still looks good. It still looks like a bull flag, so I was just waiting, and then today it went crazy. Roblox up 9% today. The call contract, it got into the money. It was an 80 call. Into money, it was up like 200 something percent, and I basically legged into it, so I sold the call above it. So on this call cost me $84 originally, and then it went up and had a value of like I'm sorry, had a value of like 2 something. And then I sold, let me look, actually I can show you right here. Look at the chart. I bought an 80 call. You can just see that the price of it right here. Bought an 80 call the other day, 413, no, 412, it's back here. For like 80 something dollars, somewhere around here. It came up today, right here, it was worth maybe 300. I don't even think it hit that much actually, like 280 maybe. And when it was worth 280, yeah, we'll say, I think it actually was 280. When it was worth, we'll just say 300 to make it even. I don't think it was worth that much, but when it was worth about $300, so I could have sold it, made 300 and subtract my cost of 84. I could have done that, but to kind of play this out longer, because I thought Roblox would keep going. However, I didn't think the velocity would keep going, so the speed at which it was climbing. Because if the speed is climbing slower, if it slows down, and it's a short expiration option, it's going to typically lose value, even if it stays flat, or even sometimes if it's climbing, your call could lose value, depending on how much premium you spent on it when you bought it. In the case of this Roblox call option, it kind of held up pretty well because the stock price did also, and then now it's it's rallying kind of into the close. So this call actually stayed up pretty well, but you never know. Typically short-term calls like this, there's any bit of red candles or decline, it just kills the premium right away. This didn't really have that. So you can see this is the run up right here. I can kind of show you side by side. So this is this run up, and then see how the stock price just actually stayed flat and even came back up and made a new high. But look what the option did. It did a lot bigger dip and then stayed down, even though the stock price was back up here. That's just because of the velocity. But then once it broke a little new high, that gave a lot of sentiment, and the option then was up there now. And now that it's breaking new highs again, this is also, but basically this is swinging with more volatility. So if this, see this just one candle here, that brought it all the way down here. So that's why I legged into it, which basically when it was worth like $280, instead of selling it, I sold another call. So instead of selling my 80 call and just being out of the play completely, I went up 2 strikes to the 82 call and sold this one. And to sell this call, I was able to sell this call because I had another call that I'd bought. That's why I'm able to sell a call. You either have to have 100 shares or the right to 100 shares. My right to 100 shares is the call contract I bought. So basically, yeah, I was able to sell this call, and the premium I received to sell this call was $135. So at that point, I'm already net positive on the position. 84, 135 minus 84, whatever that is, 30, 40, 50, about $50. So I made $50 on it, all said and done, whatever, it doesn't matter what happens. So I'm $50 into it, made $50, doesn't matter where Roblox goes now. However, if Roblox keeps going up and it comes up above 82 by expiration, because what we did, we just turned this into a debit spread. So now I'm plus $50 on it. And now my max profit on it's $250. So I've already made the 50. And now I can make the difference in the spread, which is difference between 80 and 82 is $2. Times it by 100 because a contract's worth 100 shares. So that's 200. So now my max profit on it's 251. And that's if Roblox is above 82 by Friday. So that's how you can leg into an option contract, make it safe, to also catch higher gains. So here we go. If I had known this was going to do this, then yeah, sure, I would have kept the naked call because it would be worth more right now. But I didn't. I thought it'd keep going, but if it slows down, it's not going to hold the same premium. So just the naked call that I had is now worth $350, which is great. But overall, I'll be able to make $250 on this if it stays above 82. And it doesn't have to do it quickly. It can just slowly grind up. It can just stay at 82, 89 until Friday, and I'll still make the same amount. So that's legging into options. I don't know why I just did that in the middle of my little recap video here, but I did that on Roblox today, and it's a fun little trick to do. So GME, oh, and then I did a put credit spread on Tesla. Tesla had a crazy day. I thought it might because it was breaking out of this new range it's been in. It's been in this like 700 ceiling and this whatever 590, 600 floor for 2 months now. And it hit it here, and then it came down, and I kind of thought it was going to keep coming. If you remember, I had a call credit spread up here. When it came down here, I closed it out, and then today it didn't come all the way back down to even the moving average. It bumped up. News, whatever, I can't remember what it was, but set up a nice little bull flag, and then right here today, it's just been rallying. Once it had this big green candle over this resistance it's built, I was like, okay, this thing's good. I thought I could do calls, but I didn't want to do debit spreads, and the naked calls are really expensive on Tesla, and I just love credit spreads. So I did a credit spread on it. Probably could have made more if I did naked call, but I did a credit spread. It is somewhere right there. It's already up 72%. So I could close it out today, but since this count's below 25k now, I can't because day trading, stuff like that. They basically switch me to a cash account. It's confusing stuff that doesn't matter. But basically, here's my max profit, 137. Max loss is 363. 137 if Tesla closes above 700. I could have been more aggressive on my strike. I thought 700 was good though, because that was kind of this. That was the resistance before, which then became the support. Becomes the support rather. So that 700 resistance, I was like, that'll be my new support. I'll open a put credit spread on there. And Bob's your uncle. We'll be good. So did that. Tesla's doing good. And so this option's doing well. And yeah. Oh, Airbnb actually came up today too. Wow. Airbnb was down for today. But those are the plays I made today on E-Trade. And we sold, here's a long term today. Of course, went crazy. Go over this real quick. Squares up some. Rocket actually had a green day. This is something this should be the title of the video. Rocket had a green day. Wow. And this actually looks pretty good actually, because it's got a nice bull flag. It's holding up here. Other green days it'll do this. You're like, oh, that sucks. But it's a little unfortunate for me because I sold a covered call into this, but that's okay. I'll roll it up. And I sold it aggressive because I didn't believe Rocket. When I saw this big green candle, I'm like, no way, you're gonna dump after this. I know you, Rocket. So I did a 23 call, which oh, it's actually not. Okay, it's not in the money yet, but I think it probably will be. It looks like Rocket's about to go crazy. I've got some contracts on it, as you know. Let's see, they haven't moved at all. Yeah, my call contracts on it haven't moved yet, so that's okay. I almost averaged down on it, and I was like, I'm gonna wait. I gotta wait for more confirmation, but yeah, that's Rocket. Rocket today's doing good. Tesla, of course, you saw, is doing crazy, up 433 in the long term on that one. Squares up. IMMR, UWMC, those are all up. So our account today is up 585, which is nice. Webull, what did we do on Webull? I don't know if I did anything today on Webull. Today's orders. Oh yeah, Isaiah. Didn't even tell you guys about that one. Made a little money on that. A couple actually accidentally bought contracts on that. But they were like 100%, real small little ones, and then had shares of it too and sold them. Also sold Clove, was the only thing green, and I'm trying to build my cash balance again. I know I say that like every day, but yeah. Clove might be about to just rip, but I don't really care. Build my cash balance. On this account, of course, we didn't talk about we did talk about Roblox. 10%. Well, we talked about Roblox with that. See, if I just left that call naked, yeah, I would have made more at this point. But it's like locking in profits, and if you only have one contract, it makes a lot of sense to, leg into it if you think there's more upside. And you never really can know for sure. But if I had two contracts, yeah, maybe I'd sell one and then ride the next one, because that one would cover the cost of both. You make the other one free, make them both free, whatever. But I only had one, so I wanted more upside potential. Looks like this thing, if it holds up above 82 by Friday, we'll get max profit on that. So that'll be $80 into $250. So not a whole lot of money, but it's a win, and a win is a win. A win is a win. And you just scale that up with more confidence and more practice, and however many percentage, 200% that is, or whatever, 300%, you just scale it up to 10, 15 grand and you're making good money. So that's pretty much all the news I got for you guys today. Thanks so much for watching. Sub up, like up, comment down. Happy money sticks around. Covered a lot in this video. I don't even know what to title it. Max Pain Theory. Liking into options. I don't know. Follow us on Twitter at HappyMoneyYT. He actually just tweeted that like a week ago. He's running out of gifts to tweet. All right, thanks for watching, guys. See you tomorrow. Peace out.